Hi, welcome everybody to this wonderful panel and keynote speaking from today, presented by AQUMON and co-organized by the Center for Chinese Studies at the CUHK. So today we do have a very lovely packed schedule, starting from 4:30 all the way up till 6:30. And to begin, maybe I should first start introducing myself. My name is Caroline York, and I'm the head of corporate communications here at AQUMON, a digital wealth management platform based in Hong Kong, where we help people make investments much simpler and much more accessible. So before we go into our keynote speaker by our CEO, Mr. Kelvin Lei, perhaps I would pass the time a little bit to Tim and Fung from CUHK, if you guys would like to speak a few words about today's event, and then we will proceed. Thank you.
Well, thank you very much, Caroline, for the introduction and for working with us on the event. It's a great pleasure to welcome Kelvin, to welcome you, to welcome all of the other panelists to this discussion this afternoon. I think what we're focusing on is something that's quite dynamic situation. There's a lot going on in the world. There's a lot going on in Hong Kong and the GBA, and it's going to be a great opportunity for us to dig deep into some of those issues with real experts and practitioners in the field. So we're very pleased to be working with you on this event and look forward to the discussion this afternoon.
Perfect, thank you very much. Fionn, would you like to say a few words?
Sure. Yeah, I would like to express my thanks to all the panelists, and including Bob, Mandy, Stephen, Andy for speaking for us in this panel, and also for Caroline and Kelvin to hosting this event. And yeah, this event came into being around September last year. It took a bit of effort to organize all the panels and to have all the topics in the being. And so it's actually great pleasure, and I hope our students will enjoy this event as well. Thank you.
Thank you very much. So just so everybody here has a bit of a rundown for today's agenda, we will start off with a keynote speech about the digital wealth management in the Greater Bay Area by Mr. Kelvin Lei, CEO and co-founder of AQUMON, followed by a short Q&A session, around about 15 minutes for all of our audience. And then we'll move on to our panel, whereby we will be delving into the Greater Bay Area initiatives from the angle of different asset management, and also from different family offices, as well as securities. For our panelists, we do have Mr. Andy Wong, fund manager and founding partner of LW Asset Management, Mr. Bob Fung, director of APAC Business of Infusion, Mr. Stephen Powell, CIO of the Feng family offices, as well as Ms. Mandy Lam, general manager of the Great Bay Securities Limited. So without further ado, let's go forth and invite Mr. Kelvin Lei to introduce the Greater Bay initiatives for digital wealth management. Thank you very much.
Yeah, thank you, Caroline. And it's my honor to be invited to the panel discussion with CUHK to talk about, the financial initiatives in Greater Bay Area. And I'm representing AQUMON, a fintech company that is originated from Hong Kong, but we also have big office in Shenzhen since 2017. And I think for the past 6 years, we've been, participating in the progress of the fintech industry, especially in the GBA area, and have some deep root and also successful case. So today, I feel very honored to be here to share my past experience and also talk about the future of fintech and the financial industry. So my topic today is from high finance to big finance. That is regarding to the digital wealth management. It is happening, globally, not only in GBA area, but in like the different places across the world. So firstly, I like to spend a few minutes talking about the history of fintech. So back in 1990s, we see several players here. They are sorry. Excuse me. Yeah, can you see the screen? Yeah. So back in 1990s, we see a lot of players that is happening in the operating side. We see Fiserv and Hang Seng, they are already very large companies, and they have been serving with large institutions in the back end. And in the 2020s, we see companies from like PayPal and Visa. They are doing something in the payment industry, and Elon Musk, he also came from PayPal, from a fintech industry, and he's doing pretty well in SpaceX and Tesla. But what I want to say is that the fintech is a pretty large industry since 30 years ago. And in the recent years, what we have seen in the industry happened is that we have different kind of players coming to this industry. For example, SoFi and the Lending Club. What they are doing is providing some advanced technologies in lending and the other stuff for people to have the better returns and lower down the cost. What's in common, right? So we can see that these kind of players, they are heavily related to IT, and also they want to reduce the repetitive manual work, but they are weakly connected to financial markets. And from 2015 to 20s, what do we see? The new players in the industry, that we see Futu in Hong Kong, Robinhood in the US, and Coinbase. They are doing something in the crypto side. And these players, what's in common, right? They lower down the threshold. They use fractional shares, lower down the threshold. Even you got $1 US, you can invest in like Apple and in Google stocks. And also they connect the investor to financial markets, which they have been doing a lot of the promotion to grab the young investors, especially the college investors, to the financial markets. But one thing they are doing is, these trading platform, they are not responsible for your performance. Everything is, self-directed trading. So that's the very interesting part in this area. And now we are facing the new era. So what's happening recently, and what's the biggest part that is unconquered from the fintech world, that is wealth management. Why? Firstly, it is heavily regulated, and second, it takes a lot of time to build trust, and third one, it requires a lot of ability to make money for your clients. So in the past, we are seeing a lot of things that is happened. We are serving for the unbanked clients, but now we are facing a new problem that is called unprivate banked. So these are the mass affluent clients who have investable assets less than $1 million US. How many of them globally? We are seeing like 330 million people. That is a huge number. But before that, the wealth industry only serve for the ultra high net worth individuals. For example, they are holding like 100 million US. And how much of the wealth do they hold? We are seeing almost 60 trillion US dollars, according to BCG's report. But for the billionaires globally, 60,000 billionaires, they are holding 22 trillion US dollars. So it gives a lot of problems to the financial institution, right? The RMs, they are facing the new type of clients, and their investment needs is quite wide, right? From the stocks to the fixed income to bonds to even to like virtual assets, but they are not prepared. So we can see that the size of different kind of asset class and what's the holding investors they are behind. For example, on private banked wealth, we have 59 trillion US dollars. And then we have this US equity market, which is 45 trillion US dollar. And the China equity capital market, it is 15 trillion US dollar. So this one, you know, it's pretty small, but it is happening really fast, and a lot of dramatic things happen every day. Here is the crypto world, right? Around the 2 trillion US dollar. So now the industry is facing the new problems. First thing is to serve more clients, and the second thing is to, you know, a lot of different spectrums happening in different areas. And we are facing the new era that is from high finance to big finance, to serving 60,000 people globally, and to serving 330 million people globally. That is a totally different kind of play in the game. How to do big finance, and that's a really you know, a question presented to a lot of the institutions. It is not easy, right? We have this impossible triangle. So what's the three things that is very hard? The first thing is you are facing a mass market, but everybody wants tailor-made and low cost, which is really hard for the, you know, very heavily related to the human to serve the clients. Second thing is you must comply with regulations. You know, regulations nowadays, they have very restricted constraint in different kind of underlyings and how you serve your clients. And the third thing is that also the third thing is very important. That you should make money for the client. That's the, you know, eventually the ultimate thing for the wealth management industry. AQUMON was born in 2016. If you can see from this picture, we started the company in the library of CUHK. And we can see a pretty good sea view from the library. And we have the mission from day one. We want to empower every investor. But how can we achieve that? We have a small app everybody can download in Hong Kong. We got almost 100,000 download for the past 5 years, but it's not fast enough. From my point of view, I used to work in investment bank for almost 10 years. I used to work in Credit Suisse and Deutsche Bank. I know in Asia, most of the wealth, you know, the investor put their money into the banks, into large security brokers, into the insurance companies, because they trust these large institutions. So if we can empower those institutions, we can achieve our goal faster, right? We want to empower every investor. So remember the impossible triangle, and we have do a lot of things to make this possible. First thing is that we want to do everything automatic, from the client onboarding to the risk questionnaire, to the portfolio matching, to the execution, monitoring, rebalance, and also a lot of the user journey is 100% automatic. And second thing, we want to be trusted. So we applied for the SFC's license back in 2017, and also we pushed the frontier of the industry. I was sitting in the SFC's Fintech advisory group member, and we give a lot of advice to the regulators every year to push the wealth management industry forward. Thirdly, I think the most important thing is that we need to give discipline and very scientific investment method to our clients. That is, everything is driven by data and algorithm, very, very disciplined. And that's why we have solid background track record in the past 5 years. So here's our journey, right? Our journey is a typical company that come from Hong Kong to GBA area, and we see both sides is happening, especially in the fintech area. So back in 2016, we have our first data and AI solutions in global asset allocation, which is called the Smart Global. And in 2017, we got the license from SFC, type 1 and 4. 2018, we are the first one to launch robo-advisor with a bank, which is China Resources Bank in Shenzhen. And 2019, because we have the 3 years of track record, we signed more than 50 institutional partners, both from Hong Kong and in Guangdong province. And 2020, we see a very big growth in terms of AUM and the users. We got 500% growth since then. And actually, we just finished our financial year of 2021. Last year was also very, very good. We got almost 700% growth. And so I can see that it is a big trend happening in the wealth management industry. So what have we achieved? We are serving more than 500,000 users on both 2C and 2B. And 90% of the positions if they're holding 1 year above, they got positive returns. And also we launched with institutions more than 30 robots. And we have this very, very successful API model to connect to the institutions. But I think we are just at the beginning of this journey, right? We want to empower more than 10 million users in GBA area, thanks to the new arrangement from last year. We have this very important thing called Wealth Management Connect, which we have 19 banks in Hong Kong and 24 banks in mainland China that each of their clients can open account with the bank and can do the investment cross-border. So that's the first time it is opened to both sides of the investor can invest globally. So one client, for example, he's in Guangzhou, he can open account with Standard Chartered branch in Guangzhou, but he can invest in the mutual funds that is sold in Hong Kong by Standard Chartered Bank. So this arrangement gives us a lot of opportunities to empower the institutions. For example, no matter it's a robo-advisor or it's a smart fund, to select the best fund, give them the scientific analysis module. And I think in the future, the size will grow much, much bigger from there. Now we have 150 billion RMB quota each year. And in the future, I think it will go like 5 times to 10 times because a lot of investors have this kind of needs. So in 2 years, we want to launch 100 robots with different institutions. And this kind of institution, including commercial banks, virtual banks, insurance companies, securities house, and also asset managers. But to empower this institution, it is not easy because in the past we faced a problem that a lot of the institutions, they need to report to the regulator by themselves. They need to hire a third party to do the due diligence with us and generate a report and answer all the questions from regulators. It usually takes like almost 3 to 6 months to answer all the questions. But I think it is a very good standardized system that can be connected with the institutions through cloud and API connection. And why don't we just use the other fintech industries practice, such as banking as a service, regulatory as a service, state as a service. So we have invented a new business model, which is using the SaaS model to give the faster connection with institutions. So it is really amazing. We launched this business model since last June, and it is 100% compliant to the regulation because we have this report with SFC and they give us this green light. And also it is like almost 20 times faster, only 4 weeks to deploy the system. And we have more than 10,000 tailor-made portfolios for the clients, and also can reduce the cost by almost 60% for the initial development fee. So what the clients can get through our SaaS system, they can have like 4 to 15% of return every year from conservative to aggressive. And also everything is tailor-made, right? Each of the clients can just open their bank's app and have their optimized tailor-made portfolio made for them. And just one click, they can do the execution. And in next 2 years, I think because of this new business model and the technology behind, we want to empower 1 trillion Hong Kong dollar into this new wealth management service. And more than 10 million users can be benefited from this project and bring new revenue to the industry of more than 10 billion. As you can see, 1 trillion, it seems like a big number, but actually in Hong Kong, we are very big financial hub. We got more than 35 trillion Hong Kong dollar in the AUM of wealth management industry. So 1 trillion only occupies like 2.85% of the total AUM. So it's still a long way to go. Yeah, the team is very passionate about our future, and we have spent so much time and research energies into this industry. We have more than 100 people, and 60% of them got the degree of master's and PhD. I think we got the biggest PhD team in Asia to do the research of all the wealth management products. So I think to summarize my my PowerPoint, I think this is the future of finance, and we are going to enter the era of big finance. So thank you very much. If you have any questions, I'm very happy to discuss. Thank you.
Thank you very much, Kelvin. So let's open the floor to questions. If you would like, obviously there's the Q&A button on the right-hand side of the webinar. So feel free to type in your questions. Alternatively, feel free to also raise your hand. Okay, we have some first questions coming through. In terms of RAS, can we have a bit more of an explanation of what it is, and who did you partner with, and how has that helped them?
Actually, this is a very good question. Robo-advisor as a service, it is a pretty new concept to the institutions. It is a portfolio investment for their clients. And what we can do is to provide a model portfolio, which is from conservative to aggressive. And the underlyings can be mutual funds or ETFs. And each of the portfolio consists of 10 to 15, for example, mutual funds to give them a very diversified portfolio. And for the application is to, Huatai Securities or CITIC Securities International, very, very large brokers in Hong Kong. And their clients is seeking for safe investment or longer term of investment because of, these 2 years, the market is very, very volatile. So, now we have already launched the product with them. We see a lot of investors come to this market and use our product.
Thank you very much, Kelvin. So we do have another question coming through. What's AQUMON's unique edge compared to other players in the market? I think especially towards the GBA area. Yeah,
I think the two different edge we are having compared to the other players. The first one is we are having a very scientific team in the algorithm part. We got the biggest PhD team, more than 15 PhDs in our company. dedicated in the alpha and also even in high frequency trading platform. So that's completely different from the other players who is only have a small team or very focused on marketing. And the second one is we are holding a license. We are holding type 149 in Hong Kong, and also in China, we're holding a private fund license. And in the US, we have a registered investment license. So licensing is very important for us. This is also another barrier. Some of the other players see it as a cost, but we see it is the future, because when you cooperate with institutions, they care about the regulation and what they are thinking about the new system. So these two parts give us a lot of edge in providing the new technologies to the industry.
Thank you, Kelvin, for that answer. We have another question coming through. How do the GBA plans add value at AQUMON, and what's your next step?
Yeah, the GBA actually is a very, I think we have been benefit from the GBA initiatives since 2017. When we started, there's they are not like marketing this as a GBA concept, but I already know if we want to do something, especially in the IT side, we need to go to Shenzhen to build the team. So we built a very large team over there, almost 70 people in Shenzhen, and from there we have reached to a lot of opportunities in China. For example, we have been cooperating with more than 80 institutions in mainland China, initially from Guangdong province, and this year we opened Shanghai office as well to cover the Jiangsu and Zhejiang market as well. So I think it is very, very important for the Hong Kong startups to expand to mainland China and started from GBA area. And in Hong Kong, I still think it has unique positions in Hong Kong because of the fundamental infrastructure in terms of the business and also the innovative, especially in the algo part and also the finance part. I think Hong Kong still has the edge, and Hong Kong is also the hub of the global financial center. And from here, we can go to Singapore, we can go to Japan, because we have very good reputation in terms of global status of the financial hub. So both sides got their vibes, and I think it's you need to have a very good, very sound plan to do business in both sides.
Thank you for that answer, Kelvin. I think our audience is actually quite interested in the GBA topic altogether. They're asking, what is the impact of Wealth Management Connect for fintech such as yourself at AQUMON?
Yeah, as I just said, okay, I think it's one of the biggest change since we entered this industry. I came to Hong Kong back in 2008, and for the past almost 13 years, there's always like a back and forth, right? They have only one way. Either they encourage you go out, or they encourage to go into China. This is the first time to have this scheme that the capital can go both ways, right? So I think it's revolutionary for the institutions to have this channel to invest. For the fintech companies like us, because we aim to empower the institutions, we do see a lot of requirements from the banks who are holding this license, are requiring for more scientific, more transparent investment solutions for their clients. For example, because of the regulation, Hong Kong's relationship managers cannot call a client who opened an account in Shenzhen or Guangzhou. So the clients in mainland China, they can only do the search or do the research was browsed by themselves. That's why our smart fund, which is using multi-factor models to select the best funds in different category, is very welcomed by the institution because it gives the very detailed information to the end users of how they should invest in this fund because of the dynamic analysis of the different mutual funds. So in the future, I also think a robo-advisor can be a very good service for the onshore investors because once they go abroad, go offshore to invest, it is a completely new market. Everything is different. You know, the financial markets, the regulation, the instrument is different. So they need a diversified portfolio can give them, you know, a very scientific, also sleep well investment in the longer term. So that's why I think fintech will play a very important role in terms of GBA's Wealth Management Connect.
Perfect, thank you. So we have a question actually directly from Tim. So here's what he's interested in. I would like to hear more about the story of AQUMON beginning in the library of HKUST. What happened to bring you together there? And also as a related questions, you mentioned qualifications of your team. What do you think about education in finance in Hong Kong, as well as the GBA? So this is part one. Let's start from maybe the brand story, and then we'll move on to the qualifications and education part.
Actually, it is quite interesting. Me and Dr. Huang, we are the colleague from our first job. We both working in a bank back in 2008. We met 1 month before the financial crisis. So I remember it's June back in 2008. And I was fixed income derivative sales, and Dr. Huang was a derivatives quant guy. I met him. I think he's very, very smart and also very diligent about his work. After financial crisis, I changed the bank. I go to Credit Suisse, and Dr. Huang go to HKUST to pursue his PhD degree. He spent only 3 years to get a mathematics PhD degree and published 4 top journals. You know, it is impossible for the ordinary people to do that. But he's he's very, very unique. He's one of the top students in the mathematics department. And when I was in my last job was in Deutsche Bank, I already see the fixed income is not going anywhere. So I start to thinking about 2 things. The first one is I want to do something that is in line with clients' interest, because I used to sell derivatives, which is a black box, high leverage, to kill the clients immediately. So if I want to stay in the financial industry longer, I need to do something, that is truly for the clients. And second thing is I want to do something that is not easy to copy, right? I want to do something that have some true technology, have some barrier, that requires a lot of things to do the research. So I think about Dr. Huang, right? We were a very, very good close friend, and he's in HKUST teaching financial engineering. And I went to the school. I remember it's October 2015, and I met him and I told him I want to do this kind of startup. And he said, "Oh, it's easy." and then we start to start a company in the library of HKUST. It's a very humble starting point. We have no money, we have no background. We just the 2 people, in the library. A lot of students. We hired some interns in the very beginning, and they think we are we are some liars, but we managed to go through that. We have our first product back in 2016, And then, we start to hire more people, especially, the first full-time employee was a PhD from HKU in EE, electric engineering, and he was only 24 years old. And now he's leading a very large team in our quantitative team, more than 10 people. So I think the culture of the company is always, research driven, and everything we do is quite fast. We want to capture the big wave of this trend, and every minute I don't want to waste. I want to I want to fighting with the team, and also give the best solutions to our counterparties. Yeah.
Thank you, Kelvin. I hope that answers a part of your question, Tim. I think going forward with this, the topic, I think, Tim, you wanted to ask more about how the education within finance or even fintech itself can be improved to make it more relevant to the future of specifically our industry. Kelvin, do you have any thoughts on that?
Yeah, actually, what we have been doing in the wealth tech industry is that we also see a lot of up and downs, right? We see the future potential, very big potential in wealth tech in Asia. But one thing is that the education in this area is not enough. I want to be very honest to that. For example, robo-advisor, which is very common sense in Europe or in the US, because the education, financial education over there is, I think, is very robust, because everyone over there have the concept of diversified investment. They have 401k in the US. They have a lot of wealth management in the very large wealth management industry in the Western countries, and they do believe this kind of investment can make money for them. But in Asia, especially in Greater China, it's not only Hong Kong, in Greater China, because of the history of the financial market is very, very short. Only like in China, the A-share market only got 30 years of the history. So people are not tend to think about the asset allocation side. They're still thinking that they can make money from their own gambling in single stocks. And also in Hong Kong, in mainland China, for example, they have no access to do global asset allocation. They can, because of the capital control, they can only invest in China dominated assets. So they also don't have this concept of global asset allocation. So we have been done, a lot of things in the client education side. We have, I think in the past 2 years, we have done more than 200 seminars, both onshore and offshore, both online and offline, to give the education to our clients. And even with our counterparties, with our partners in the institution, we still spend a lot of time to persuade them that this system is good for you. This system is the future of the service of the institution. Every institution will have this kind of service in the future, right? We see UBS bought Wealthfront 1.4 billion. We see Goldman bought robo-advisor called Next Capital. All happened this year. A lot of M&A happening in the Western world, but in Asia, still, I think it's lagging behind, right? People are getting used to this concept, but not putting a huge amount of money to this side. But in the Western world, the education or the concept is that you need to put 30 to 50% of your whole investable assets into asset allocation. But in Asia, it's not that story yet.
Thank you very much. So are there any other questions from the floor? I believe this is a great point right now. to stop and move forward if we don't have any further questions. All right. Thank you so very much, Kelvin, for your sharing. It's super exciting. As you mentioned, digital wealth management as well as fintech is a great space to be in at the moment. And we will see further acceleration of digitization, especially with all the new initiatives within the GBA. For those who are interested, technology is pushing forward the agenda of financial inclusion, and AQUMON is a great study for this. Now, we will then take on our panel speakers for today. So our panel topic for today is Hong Kong's opportunities within the GBA, financial landscape and future prospects. What we hope to do with this panel is that we'll be focusing and demonstrating a model of cooperation and integration of Hong Kong within the Greater Bay Area. And hopefully our panelists can present to us some of their insights about the current financial landscape, global asset allocation strategies, possible challenges, and future prospects. So I would say over the past 4 decades, Hong Kong economy has been super closely connected to mainland's development. And as the mainland becomes the world's 2nd largest economy, Hong Kong has been given full play to considerable advantages, contributed in the 14th Fifth Year Plan now. Hong Kong will continue to strengthen its status as an international financial center. It has also the world's largest RMB liquidity pool and provides a wide variety of offshore renminbi investment products, having handled over 70% of the world's offshore renminbi transactions in 2017. So as part of the GBA initiative, Hong Kong is encouraged to continue its role as an international asset management center and a risk management center to promote the development of high value added financial services. As market surveys show, there are currently 450,000 high net worth families with more than 6 million of investable assets across Guangdong, Hong Kong, Macau, and their aggregate investable assets, sorry, that wasn't around, so 6 million. It should be 6 million on average. However, the total investable amounts is roundabout closer to 2.7 trillion, making, Greater Bay Area one of the world's wealthiest regions. So today, joining us, for those who have tuned in a little bit later, we do have a great panelist, a great panel full of wonderful speakers. So we will start off with Mr. Andy Wong, the fund manager and founding partner of LW Asset Management. We also have Bob Fung, director of APAC Business of Infusion, Stephen Powell, the CIO of the Feng family offices, as well as Ms. Mandy Lam, general manager of Great Bay Securities Limited. So what we'll do is probably we'll go about and have a brief introduction of each of our panelists. Perhaps we will start alphabetically with Mr. Andy Wong. Welcome, Andy.
Hello, everyone. Okay, I try to turn on my video. Sorry, there's a technical issue. I couldn't start my video.
No worries. We will fix the video situation for you immediately, but please go ahead and start your introduction.
Okay, great. Okay, hey, thanks for the invitation, and very happy to see you guys here. This is not my first panel experience regarding GBA. I've been talking about this topic for a few years, even for some local banks for the internal training. And for today, nowadays let me introduce my company. LW Asset Management is an asset management company in Hong Kong. Actually, we bought and restructured the company in 2019. So I'm not only a fund manager, but you can also treat me as an entrepreneur. And I'm lucky that although I've been in financial industry for only roughly 10 years, but since I have management experience in the investment field since 2016, so it helps a lot, and I believe hopefully my story can motivate more and more students to believe in themselves in the coming futures. Since we restructured LW, actually we focus on global multi-asset strategies. So not only about Hong Kong and China stock, but also we talk about US, Australia, and even some European markets, about equities, bonds, commodities as well. We cover those topics. And for our clients, we mainly serving some family office, high net worth, and also some retail clients as well. We have 2 offshore funds and some discretionary portfolio services. And there's a quite unique service we are having is we have a passive index cooperate with Selective, the German engineering indexing company. Our index is Selective LW US and Australia Future World Index, which is also a multi-factor strategy. And for our black box, and also we add in some ESG elements, which is our objective as well. So for the index since 2019, our index outperformed S&P 500 and Australia ASX 200 index by 20% and 50%. So to conclude my introduction, we are using both passive and active strategies to build up global multi-asset strategies for our clients.
Thank you very much, Andy. So next, we will welcome Mr. Bob Fung, Director of APAC Business Infusion, to do a brief introduction of himself. Welcome, Bob.
Appreciate that, Caroline, and appreciate to pronounce my last name better. And my US colleague always pronounce it wrong, so it's weird to hear that that's accurate. So my name is Bob Feng, Fung, actually. I mean, I'm the head of APAC Business for Infusion. I have been with the firm for actually almost 10 years, but I consider myself actually more like starting up the business, particularly for Hong Kong and APAC. So actually 7 years ago, I relocated from New York to Hong Kong to basically jumpstart the business for Infusion. I mean, for those who are not very familiar with Infusion, we are the market leading provider of a full front to back investment management solution provider, basically. So I mean, a bit more on what's full front to back, right? A lot of people talk about it. Basically, you can almost say like 90% of the work that a normal investment management would do, right? All the way starting from investment idea generation, order management, execution, compliance, portfolio management, lifecycle, investment lifecycle management, risk, compliance, accounting, NAV, analytic, middle back office services, and all that. Right? You can almost think of it, like I said, it's very comprehensive ecosystem where most of the staff of an investment firm, including like your likes of your ops person, trader, portfolio managers, compliance managers, risk, finance, and a CIO, COO, CEO, they all basically live in this ecosystem. And across the globe, we have over 700 customers, actually including all the way ranging from the alternative side, hedge funds, family offices, and all the way to the traditional side, long-only asset owners and institutional asset managers. I guess coming back to a little bit my story. I mean, when I hear Kelvin talking about launching a company from a humble kind of like situation, I feel the same. When we get to Hong Kong, we are into this. I mean, he has a great sea view. I don't have any views in a service office. I'm in Central, starting out from just 2 people now. I mean, I guess that's something that I will be always proud of. That's actually bringing the business to, I mean, now surpass the 200 client mark in APAC back in earlier this year. I guess start of the year for this year that we surpassed the 200 client mark. And we also have offices starting obviously in Hong Kong, but now in Singapore, Australia, Shanghai, and Shenzhen as well. And with close to 100 employees in APAC. So basically building the business from zero to now, I guess, I mean, arguably the most respected and market leading service provider. And we were listed on New York Stock Exchange back in November last year. Speaking to the Greater Bay Area, this topic, bit more about my background. I was born in Guangzhou, basically, right? So always, basically, Greater Bay Area is always nearest and dearest to my heart. I'm thrilled to have the chance today to talk about the opportunity that GBA has presented to us and my view on how because fintech is going to evolve and fuel the growth of the capital market in Greater Bay Area. So that's my introduction. Thank you.
Thank you, Bob. Great introduction. So let's move along to Ms. Mandy Lam, General Manager of Great Bay Securities Limited. Ms. Mandy.
Hi, everyone. Good afternoon. Hi, this is Mandy. I'm the general manager of Great Bay Security right now. Actually, I work at RHB as a managing director before, and also work at Credit Suisse as a director before. And I'm more familiar for financial side for 20 years experience. I'm quite old right now, can share more idea with each other, like how's the market, like the history. Actually, today I will be share some idea of the green bond market and press for the cross-border financial difficulty and how's the solution can be solved for the Hong Kong resident or the Chinese resident. So my introduction is quite simple. Maybe we can pass to the next speaker for his introduction.
No worries. Thank you for your introduction, Mandy. So for our final speaker on the panel today, we will invite Mr. Stephen Powell to introduce himself. Stephen.
Hi, good afternoon, everybody. Thanks for inviting me for speaking here. And I'm a CIO for Fung Family Office. We are multi-family office headquartered in Guangzhou, and also we have office in Beijing, in Hong Kong, and also we have strategic partnership with other parts of the world with some of our partners around the globe. So we basically we provide services such as family trust, family governance, family business governance, and also DPM, discretionary portfolio management for our clients. So it's a whole list of services for the clients to solve the problem, also like immigration and also tax consultancy as well. So for me, I overlook the area on the DPM, the portfolio management side. We manage multi-asset portfolios, multi-asset as in equities, fixed income, alternatives, and commodity. So we also provide some tailor-made solutions for our clients. There's the main parts of what we do for our clients. So we basically provide holistic solutions for clients. For me, I have around 20 years financial experience in asset management, in financial service company, and also in Jockey Club, and also in investment banks and JP Morgan Asset Management as well. Thank you.
Thank you, Stephen. Great. So there goes all our introductions. Let's kickstart this panel and deep dive into some of the topics. So first off, let's begin by looking at what are some of the opportunities that we can already foresee within the new GBA initiatives, especially when it relates to finance, such as the GBA Wealth Connect, the Bond Connect, Stock Connect. I think maybe Mandy, you could provide us with a great overview of the landscape and delve into each of these different initiatives.
Yeah. Okay. Actually, because the coverage is quite a lot today, maybe the other area maybe pass to Andy. And today my focus, I will be a little bit cover more about the green bond market, because maybe the student want to know more about the green bond. So that's why today I prepare some sharing of the green bond. For the internationalization of the green bond market in Guangzhou, Guangdong, Hong Kong, Macau, Greater Bay Area is promote the maturity of China green bond market. An effective way to show China green bond market has just started. Although the development speed is relatively fast, but the currently green bond market is not yet mature. The internationalization of green bond market in GBA area will help to introduce overseas issuers with more diversification for the financial needs. For the product supply of China green bond, provide more assets choices for domestic investor, making China green bond market. The fields has more depth and breadth, at the same time attracting foreign investor with more diversification for the invest in China market. Actually, at the previous experience, a lot of investors, they want to invest the green bond, but then they don't have too much choice. They don't have too much open area can cover this market. For the China bond market is quite mature, but then the foreign investor also don't have too much transparency to know more about that. For the Hong Kong side, I think we can be the better like channel can be connected for the cross-border party between China and also between like Hong Kong to the like international investor. For the present, the insurance and the investment of global bonds are mainly active in the Europe and American market, and the rights of formula green bonds rules and the global bonds interest. The rate, pricing power, and the currency pricing power is also controlled by developed countries such as US. But then in China, we don't have too much voice and too much like control of the saying of the market. But at the future, we know the rank of the second in the world, China financial soft power at this time is weak, but then we are the second in the world. I think at the coming times, our voice can be more at the international finance market. And in Hong Kong side, we can help them to provide more voice to the international for the connection. Yeah, and for the introduce international green bond to China green bond market provide like a lot of like choices. For Great Bay Area, we see like at the present, China's have more promoting the internationalization of the RMB and for the opening of the financial market to the outside world. At the coming times, I think the green bond market for open can help for RMB also internationalization is more important because the foreigner can invest like our green bond and we can invest the international green bond, which is the both sides can be more easy to connect like each other. The bond market major component like is the major component of the market. It is quite important because like China is the major manufacturer, can produce a lot of like product to like export to the overseas for the worldwide. So the green bond market in China, like the exchange is already start. I think like Hong Kong can be the key person, can connect for the all party. Yeah. And maybe Andy can also share the other part for the equity, because today I want to raise the topic of like about the green bond.
Okay, perfect. Thank you, Mandy. I think that was a good segue because we are going to move swiftly into Andy, and we're going to talk a little bit more about ESG investments as well as green financing. For those in the audience who don't know what ESG stands for, it's environment, social, and governance topics when it comes to investments. So perhaps we can pass the floor to Andy first. What kind of interesting, favorable policy environments are happening within the GBA, and what interesting opportunities do we see?
Okay, thanks, Caroline and Mandy. I would say that for the favorable policy in the last few years, one of them is other than the green bond and also lots of stock connects, ETF connects, those kind of rules are coming out, and ETF is one of the main topic everyone should talk about, especially about the passive investment strategies. But of course, AQUMON should be talked about a lot already. So maybe I focus more about ESG. Actually, ESG means environmental, social, and government. So we make the short term ESG. Actually, it's getting more and more important in the financial world. I mean, actually, this is not a new topic, but starting from the COVID, everything changed. Also the Paris Agreement, and also because of the COVID, everyone talk about ESG should be a new way to talk about. Actually, for LW, we have contributed and supported ESG for a few years, especially if some students here, maybe some of them may notice that me have been a mentor in the HKUSD Finance Society. And among those time, and when we talk about ESG, actually I was quite surprised. Not many students know about it, but I would say that this is a room everyone can get into, and there's because one of the things is there's no an international standard to talk about, hey, which ESG standard should we follow? For example, should we follow MSCI or S&P, or even if you look at some ESG standard among developed market, and and even US and Australia, maybe there's slightly different. So if we think about it, if we talk about ESG, no matter what, if we talk about even mainland China and some other countries among the region, actually the rules or the way how we get the scoring, I mean the quantifying scoring about ESG could be slightly different. So I would say that this is why we need to capture the opportunity when as just Mandy talk about maybe in the future when there's more seeing from mainland China to the world, maybe this is one of the area we should focus on. And also recently, I would say that from the GBA side, the policy side, if we, among our financial industry, I would say this is a bit painful, but happy to see that SFC, our regulator, actually started to regulate about how the asset management company to comply with some ESG standard in this year, I mean 2022, especially the second half of the year. Lots of large institutions have to comply with certain suggestions. So which means everything is like that. I mean, no matter what the film is very nice or something many people support, until the government or the regulator push in the money, the fund flow, they will wait and see. But since the regulations coming out now, we believe the fund flow and also the market, the focus will getting into ESG. And maybe you can already notice that there are lots of applicants, I mean candidates to apply for the ESG certificates. This is one of the way you can see how the regulations can involve in some new policies to boost up the main target. And I want to clarify one thing about the ESG. This is what we have been experiencing in the last few years when we talk with our clients, especially from those mainland clients. They have a myth saying that, I mean, some conservative investor, they may say that, okay, if you're concerned about ESG, or some companies, they really talk about ESG, they need to sacrifice their company return or your investment return to achieve your ESG objective. However, if we look at the results, maybe it was right before 2019, but starting from 2020, this is a new cycle because of the COVID. We saw that actually most of the ESG ETF, actually they outperformed their original ETF. For example, like the MSCI ESG index outperformed MSCI EM index. Also, it happened in the same way in the USA market as well. So this is already, I would say that the fund flow or the investor is changing their mentality. And also, if we look at the fund flow, if we talk about business-wise, you can see that actually most of the ESG fund, actually they have large amounts of inflow. If we look at the last 2 to 3 years, if we look at the US and Australia market, the ESG ETF, the AUM size increased it more than 100%. If we look at how many numbers of ESG related ETF listed in the US and Australia, also in the last 2 years double up as well. So if we think about to capture the new trend globally, I think Hong Kong, we can try to capture the new trend about the ESG, and also try to merge about how's the ESG among our region to international as well, and set a new global standard as well.
Thank you very much, Alan. I believe, Stephen, maybe you can give us some perspective from a family office investment standard. What kind of opportunities or trends do you see within green financing ESG investments?
Yeah, I think some of the views Andy already mentioned it. For the portfolios that we're managing now, for the funds and ETF we pick, we tend to choose the fund manager which already has a ESG screening process, which in other words, that they've already done their due diligence on ESG, whether they comply with their investment guidelines. So this is our kind of preference choice. Obviously, not many not many of the funds provide these opportunities. They still have doing the traditional way rather than the ESG ways, and then there's no choice. But obviously, for now, for all the screening and all the for our investment process and the risk management process, we tend to find those sustainable growth, or we look into that process whether they have the ESG selection, stock selection process. So this is one way. And as I think Andy already mentioned, that you probably see more and more green bond fund, that kind of ESG kind of related funds are coming up in the market. It's getting more and more. I mean, people are aware of this because of this COVID. The ESG fund flow attract more capital and people put more money in it, and then the size getting bigger. So most of the funds pitch us, they do have the they do carry this ESG selection process or this criteria, so that it will attract more people to invest in it.
And do you see that as a trend of flow coming out of the GBA area, or mostly within Hong Kong's own market? Or do you see some of your clients within the Greater China market feeling interested in this ESG investments?
I think we invest on behalf of the clients globally. So we have our own asset allocation process. So we will. I think the future trend is people will tend to choose the ESG. I would say for asset allocation, for other stock selection, whatever process, they will engage in it on behalf of the clients. So I think because, as you know, most of the GBA clients that we face, they are in the industrial area. They do not have much time in doing the investment process, engage in it, and or have the investment allocation. We represent them. So a lot of them we give them the idea, and we also educate them in a sense. So I think in the near to medium term, maybe 3 to 5 years, I think more and more people will have heard about it, and also we have all the process. 80% of the investment process will be in ESG.
Perfect, thank you. So now moving on from that, with all the cross-border markets opening up, what are some of the strategies the investors can look into and implement to tap into the opportunity, especially maybe the fund inflow from Greater China into Hong Kong, and likewise from Hong Kong into Greater China? I think there's a two-way flow. Perhaps, Andy, you can start us off by talking about some of these interesting strategies that can help people get into the capital markets.
Hello. Yes. Well, about the investment side or the fund flow side, we could see that actually the fund flow nowadays seems like getting more and more the fund flow get into the passive strategies, like the ETF markets. And we noticed that actually for the ETF market, actually happy to see that since 2018, actually the Hong Kong ETF market is grows a lot. I remember when I was a panel speaker in Hong Kong, and even some in Tokyo for some institutions panel about how to use ETF to share with other professionals. Actually, during that time, Hong Kong market, I mean, the ETF is lack of liquidity, lack of choice, but nowadays, since the market mentality is changing, and seems like investors are willing to use ETFs as well, and you could see that even like the last 3 to 4 quarters, even though there's lots of bad news, I mean, negative news about the crackdown, the Chinese property market. But if we look at the inflow into the Chinese related ETF, actually, maybe people, they don't want to do any stock picking or something. We could see that many majority of famous Chinese ETF, they still have positive fund flow and large amounts of fund flow. I think that's one of the way we could see that the people are changing their mentality. And also another way is, I think the investor, they have been changing about how they think about investment. Before, I mean, especially for the mainland investors, they only ask for return. They don't really care about the risk, what they are having. But nowadays, where they really concerned about the risk, how we manage the risk. I mean, we heard something like the following. They're saying that, okay, nowadays, if they wanna to have active management, which means they look for risk management, which means when the market in bearish or any negative news, they wish the active manager can protect their downside. They're not saying about negative. They of course no one like negative return, but they understand that outperforming in a bearish market is important. This is one of the way how they're changing. And if for those investors, if they are not really concerned about the risk, they rather to use passive strategies. They ask for any good thematic, any board base, or even some any multi-factors ETF strategies or index strategies. Because they don't really concern about the downside. They rather to capture the full cycle rally to use the passive.
Thank you for that. I was wondering, in that case, granted that more and more people nowadays are looking at risk management, especially with such a volatile market we've been seeing in the past year. Mandy, do you have anything that you could add on to this topic?
Yep. Actually, I can talk about more about the cross-border finance, like financial business, because the development of the cross-border financial business for residents in GB area have 4 major difficulty. For the first difficulty is the personal finance in Guangdong, Hong Kong, and Macau, because like we still have the difficulty in innovation cross-border. For example, if you have like Hong Kong ID, Macau ID, or China ID, but then it's quite difficult to open a bank account for each other area. So which means our money cannot easy to in and out. For the institution, it's more easy to have the solution. Like for example, they have QDII, QFII can invest like more easy. They have the proper rate for the investment. But for the individual, for the retail customer, it's quite hard. Like if you hold a Hong Kong ID, if you come to China, you want to use the asset, the WeChat, the Alipay, is quite different because we use the different wallet. So the wallet is not connected each other because if you're in Hong Kong, if we use the WeChat wallet, we use the Hong Kong dollar for the basic currency. But let's say if you are stay in China, you asset the wallet for the Alipay and WeChat is the renminbi. So how about if the Hong Kong people want to invest like China like stock market, and how Chinese people can cross-border to invest like in Hong Kong market at this moment is quite different, quite difficulty. So the best solution, actually, I think like China maybe can issue a Chinese ID like to Hong Kong people, and Macau people is more easy can solve. For example, right now in China, the digital investment is quite like efficiency. And let's say use the China ID, you can asset to buy the air ticket or the train ticket is quite easy. Just take you like 2 seconds, can be asset all the way. But although if you have the residential card in China, you cannot asset all the government side. And at this moment, if Hong Kong people want to invest in China, the only ways we can invest amount more, we use TRS. Like the TRS, so we also need to facing for the counterparty risk. So that's why at this moment, I recommend like for the investor, if they want to invest in Chinese like market for the more bigger amount, maybe they have like more choices for for using the big security firm. And then they also can using the gearing and can invest. For example, they want to invest the alcohol store, Maotai Wulanyi. In Hong Kong, they also can use the gearing to invest in food TLS. Can be maybe this is the more efficiency way, like can maximize their profits at this moment. Yeah.
Thank you for that insight, Mandy. So I think we can, we'll give the mic over to Bob. I think what is your take on these enormous opportunities available now in the GBA, especially from an investment manager's side, right? And they're attracting so many different institutional money across the globe. How should investment managers better position themselves for these opportunities?
Yeah, great question there. I've heard other panelists talking about like the strategy, the returns and all that, which obviously totally agree. It's the ultimate, I guess, the most important, I guess, factor in terms of like attracting money, right? I mean, you have good performance. So, but I mean, there's the word called institutional, right? I mean, like I mean, out of our 700 clients, they're all institutional, I guess, asset managers and all attracting mostly the institutional money, right? What does that actually mean? I mean, obviously can mean a lot of things, but from my perspective, basically that means, I mean, let me put it this way. There are a lot of, I mean, brilliant investment kind of like managers, right? With all different PhDs and all that, having great ideas, having 1 or 2 years of good track records. I mean, like there's a term that I read actually, there's an old term, right? San Yu, right? It's a San Hu, but very, very new, right? So that's where like you see a lot of those guys will be able to quickly wrap up and then have, I guess, a great track record for 1 or 2 years. But what institutional managers or investors are looking for is that, look, you are good, I mean, for the past 2 years, but how can you show me like your strategy is I guess, sustainable? And how can you, now you can do it with like 10 million of USD. How can you do it in 100 million, right? So you need to show, let's say when I am making investment decisions, am I taking excessive risk to achieve a high return? So that kind of question, I guess the institutional investors will ask. And a lot of time we see some of our clients fail to answer that question, right? To say, yeah, I don't know, right? When I make this decision, I wasn't thinking too much, right? So now, I mean, obviously the answer to that, I mean, speaking from a fintech or investment management solution perspective, that's where we come into play to show that, say, like, look, the client launch as a startup, great, but now with the technology in place, that's where they build a machine that can produce constant or not constant, but like very stable return. That's where the bigger institutional investors are eyeing on for the most part, right? So, I mean, we've seen a lot of examples, I mean, to add to that, right? For example, investor, a manager start out with 100 million, I think, a hedge fund, and they have multiple managers, portfolio managers, I mean, trading on their own kind of like allocated, I guess, capital. And as they grow bigger, I think last year they were at like 2 billion or something like that, that they start to do this like internal borrowing. Because, I mean, as you know, right, borrowing on the market is tough. I mean, it's expensive, but they may see PMs are like, PMA will say, I want to long this stock. The other one say, I want to short. So they want to do some internal, I guess, treasury borrowing and all that. I mean, that strategy alone, I mean, they can't do it now because they don't have the right technology for it and costing them a lot of money. Once they implemented Infusion, I mean, we are able to implement that solution for them, systematically do it, then they save a lot, right? That alone actually saves what we call operational alpha already, right? I mean, I don't remember exactly the number, but you can imagine like those short stocks, like if it's hard to borrow, it's crazy amount that the prime broker is charging them, right? So getting to another extent, to say the allocator or the institutional investors, they are becoming more, I guess nowadays, at least from our world, becoming more demanding. Basically, for example, some of the bigger names, I don't want to name them, we all work well with them. They're in a very strong position. Basically, their strategy is like, okay, look, I like your strategy, but I only like it on the long side. I want to level up, let's say whatever you buy, I want to double that. So I only take that one because, I mean, I'm allocating to you just to take that piece of alpha or whatever kind of like a factor that they're trying to capture. So that being said, they are giving them what we call separate manager account, and they want to have full control on that. So that, I guess those kind of situation, like the likes of Infusion will come in because as an allocator, they say, oh, I'm going to invest in 10 funds and I want to see full-time, real-time transparency across them. And they are in a position to say, look, I'm going to give you $100, 100 million, but you need to take us, I guess, infrastructure that I appointed you to take. In that way, I can see your portfolio, right? So basically, like that's obviously a very extreme extent to say, look, I mean, the investor is dictating your infrastructure, but that happened a lot. Actually, last year alone, Infusion actually onboarded more than 10 of these funds. I mean, some of them are huge tickets, right? Giving them 500 million and all that to say, look, gotta onboard Infusion, gotta, I mean, report to us real time on kind of like your risk, your reporting, your P&L and all that. So I guess my suggestion or the opportunity I see is that I do see very talented managers in China, right? They make a lot of money, but when it comes to say, how do you explain your, I guess, your philosophy, how it become more timeless and I guess all the chaseable and you can do back tests and all that, audit trail and all that, make sure that you don't make a stupid mistake and blow up the whole thing. That kind of mindset, right? I mean, besides having great track record, but also having a great machine to ensure, give the investor the confidence to say, look, I mean, I did well in the past few years, and I will continue to do well in the next 5-10 years. And that's, I guess, the music to their ears in terms of like the institutional investor side. So I guess that will be my 2 cents in terms of like when it gets to getting on the international capital market stage. That's our, I guess, investment managers in Greater Bay Areas should pay attention to.
Thank you, Bob, for that. Very interesting, actually, from the perspective of institutional investors. Now, why don't we shift the perspective to the behaviors of investors within the GBA area and what they're looking for, what kind of products they are searching for as well, and what kind of perspective they have. Perhaps, Stephen, you can fill us in on some insights regarding this.
Hi, happy to. So basically, for the clients that we, I mean, 70% of the clients that we, the families' money that we manage at the moment, we do talk to, okay, the gentleman is in the business world, either they're in fashion or they're in the IT or internet or whatever. So basically we deal with is his wife, quite frankly. So she kind of have a mandate from the family. What do they want to do, and what sort of risk they want to take, and what sort of drawdown and downside risk they want to take, that kind of thing. So we in order to fit that into the portfolio that we're managing and to fulfill the risk and return profile, so we do have several managed portfolio, like the conservative, balance, and growth portfolio, with different risk and return profile. But on top of that, there should be some more slight adjustments, such as maybe they already have a lot of asset in China, or they have a lot of asset in somewhere, so they don't want to be exposed too much in China. So we will reduce the weighting in China in that sense. So that's more a tailor-made one. Well, it's a model portfolio with a tailor-made criteria to adjust for that. So apart from that, for other tailor-made solution or other product that we come across in the market, like the green product, or we do talk to them and see whether they are interested in it, and we also have to give them some background and idea. What is it? What do they represent, and how did it come from, that kind of products? So this is the example, and this is the fact that we come across.
And in terms of the clients that you have within the GBA, what do you think generally, what are their risk tolerances like? What is their risk appetite? Are they much more, as Alan and Bob were saying, aggressive, I just want to look at returns, I'm not too bothered about risk, or do you see a shift in that kind of consumer behavior?
I mean, to my surprise, I mean, before I joined this company, I always thought that the Chinese investor are more, they can take high risk and have a very high risk appetite for return. To my surprise, the clients that we face, I mean, they are more, as I said, they're in the industrial area, the infection, they're in this. They are, most of them, I mean, say 80% of them fall into the conservative and balanced region rather than the high risk, high return region. So this is, I think, to be frankly to say, I mean, maybe they are not very familiarized with the global asset allocation model. In that sense, because we have to educate them like the benchmark 50-60% assets in US because of the MSCI World, and then you 20% in Europe and Japan, that kind of thing, and then China or even Asia only represent around 10 or something like that. So we have to represent that kind of at the benchmark in order to beat the benchmark. What sort of overweight, underweight we can do, we cannot do. Or certainly there's a region. Is a region higher bound and lower bound for each sector. I mean, so we have to slowly educate them, and also like cryptocurrency, like the alternative asset class, how much we can put in that. So we have to educate them. So this is a very slow process, but I think this is the even very hierarchy, high rank clients that we see. We do have to do this way. I mean, they're not very familiarized with this kind of allocation. I mean, in the past, they just buy a house, they just put into a big chunk of money into one product or one sector or like that. They don't do diversified return like this. Nothing like this at all.
Fair enough. I guess that would be one of the challenges of navigating within this Greater Bay Area and all the clients coming through, right? Education is key, and they're not very familiar with what the market has to offer. Do you see any other challenges that actually, kind of obstruct the inflow of capital coming into the more global market through, I guess, these channels now conduiting from the Greater Bay Area? And in your opinion, what kind of strategies can we use apart from the education to overcome? I think we were mentioning previously on our pre-call that perhaps GBA is a very, very wealthy area right now, but in terms of the market inflow, sometimes perhaps there might be competition coming from Singapore and how to remain competitive in this area. I mean,
if you look at the wealth distribution in China, if you took the top 10 cities, obviously the Beijing and Shanghai would rank number 1 or 2. So the rest of it, you have Hong Kong, and also you have Guangzhou, and also you have other cities. So the top 10 cities represent the whole wealth picture of the whole China. So in the GBA area represent, we did a rough estimate. The GBA like Hong Kong, Guangzhou, and Shenzhen, etc., add together represent around 30-something% of that whole population. So within that, certainly, what I can see is that Hong Kong will play a role as in the international wealth management hub in that sense. So actually, you can even see even the government here encourage the set of family office, that kind of thing. So I think. I can see there's no conflict between the mainland and Hong Kong in the development of family office. I can see that rather they complement each other on the advantage side. So this is one good thing, and it's an international hub in Hong Kong as a management center. There's international investment opportunities here, and also is liquidity, and also all the other kinds of relationship between Hong Kong and mainland. They can easily meet the client. I think most of the clients here, and also in Hong Kong, in China, they can come to Hong Kong to meet up. It's very easy. They were hands-on and very meet up clients opportunities. So one thing, but obviously, as you mentioned, that Singapore is certainly in a fierce competition with Hong Kong in this field. But we hope that the Hong Kong government can make up for that, for the development of the front office industry, and implement the strategy that Hong Kong can be the wealth management center in Asia. We hope that in this way. And also in Hong Kong, with this in mind, we can have a lot of support and simplification to attract more and more single and multi-family office in here, to accept offices in Hong Kong, and complementary utilize Hong Kong's expertise to develop the local economy here, and basically you can see think globally and act locally here. So in a sense, so hopefully we can see this way in the 3 to 5 years time as go by.
Perfect. Thank you, Stephen. I think maybe Bob, you can give us some input regarding, some of the challenges we're facing with this new opportunity within the GBA, and how tech could actually help overcome some of the challenges. And in fact, if you have other inputs and insights, we very much welcome them as well.
Sure. I do want to add to kind of like the Hong Kong and Singapore thing, right? Like, obviously, this is, I don't want to get myself into trouble of like, this is getting to a field of like geopolitical area. I mean, we all understand the reason. But I think like a lot of people, like among our clients, a lot of people actually talking about relocate to Singapore, but actually not that many actually took action, right? I mean, the reason is simple, right? I mean, like, for example, in terms of resource and all that tapping into China, I mean, it's not just like I guess a general term. It's, for example, if you want to trade China stocks, I mean, where the brokers are having the bigger liquidity in terms of like A-share is still like the Hong Kong brokers, I mean, tapping into China. So, I mean, the gateway will never change. I mean, that if anyone who actually wants to go in China, it's still Hong Kong, still the #1 choice. I mean, the key is really that, I mean, obviously, like now we're getting into political again, but more, I mean, even though there are this national law and all that, but still Hong Kong remains a free kind of like capital flow center. So that's actually what determines the main difference, right? The money coming in, going out, it's free, right? I mean, it's not like going to China, because China needs to be a long-term play. Going in, getting out, it takes longer and tougher, right? So that's still, I mean, for anyone that actually wants to go into China, that's still, Hong Kong is still the #1 choice. So I don't see much of a, I guess, argument there, right? So in terms of like, I would more look at it more like not challenge, but more like how you see your position, right? In Hong Kong, particularly representing Hong Kong, like how you see your position here, right? Like in the fintech kind of like perspective, obviously fin and tech, right? There are two sides. On the tech side, I mean, obviously, I mean, I've exposed to that. I mean, seeing Shenzhen and all that. I mean, the tech talent pool and infrastructure, all the policy in China really encourage that, and they have actually developed very good infrastructure, very good know-how, very good. It's leading already in China. So I'm not. I mean, Hong Kong, I don't think it's the right way to actually focus on tech. Actually, if we were to split them out, right? I say China is still mainland China is still missing or lacking the know-how. For example, all the workflows, what's a custodian, they know a custodian, what's a fund admin, and how to give away trades and all that. All those terms, they are still quite new, I mean, to it, not too familiar, right? But I mean, I guess Hong Kong has been in this environment, international capital market, how to play it, the know-how is still in our DNA, right? So I say Hong Kong, that's obviously our strength there, understand that, helping mainland China to actually get used to this international game role, so that if they want to play a bigger game in a bigger stage, they need to basically do that, right? I mean, anecdotal example, for example, some bigger banks in China actually have a race about spending in tech. For example, the top ones actually spend more than USD 200 million every year in tech. They just spend, they just invest. A recent case that a big tech firm in China actually bought what we think is like a piece of garbage software already, but they pay big money for it just to take it apart and understand how to build a workflow. So that's how much they actually want to know. I mean, like, oh, how do you guys play this game? How should I design the product so that, or the system so that I can give myself an edge, or not edge, but like also fit into your game so that you are accepting me in the international stage, right? The same goes for Infusion. Obviously, we do have plans to go into China as well. This is the similar angle that we are carrying our international expertise. And I mean, obviously a few years ahead of what China is doing now, but very quickly they're closing the gap, because once they see it, for example, like most of the funds in China, they cannot actually see a real-time portfolio view, basically, for some reason. They can only see it after close of the business day. After everything is settled, they can see the view. It's not real time for some reason. I mean, and that's basically we come in as a big shark and say, hey, why you cannot do it, right? I mean, it's quite normal for us. But then when we come in and say, look, I mean, we find the angle. That's our angle to say, look, I mean, your front and back are quite isolated. That's why you don't see the full picture, and not in the real time at least. So we can come in to fill the blank. And that's how the international managers are managing their portfolios, seeing the risk, right? Risk is managed on a second by second level, versus I heard the China rule is basically, as long as, I mean, you breach the rule, as long as you can fix it within, I don't remember, 7 days or something like that, it's still fine, which is beyond imagination, right? In international kind of like capital market laws and the I guess experience there. So those I said, like on the high level, obviously we stick to our strength, we understand the game, but fully embrace, right? I mean, the tech advantage, China has the money, the talent pool and all that. We work with them to basically build the infrastructure, the tech stack that actually more suitable to China, but at the same time help them to I guess bridge the gap to the international capital market game rule, basically. So that would be my I guess view on this topic.
Thank you very much for your insight, Bob. All right, so I think in terms of timing wise, we will have maybe another short 5 to 10 minutes of wrapping up the panel before we open up the floor for Q&As. So looking forward, right, let's talk about some macroeconomic trends. What upcoming trends do you foresee in the coming 2 years, and in what way will they impact wealth management and the way it is conducted in the GBA? Perhaps, Andy, you might want to share some of your insights.
Okay, sure. Okay, for the coming 2 years, among the GBA, or I would say that actually it's globally, maybe we would facing some pattern about the deglobalization. So no matter what in the investment side, we may need to think about what's the changing of the games may happen and what we need to prepare for. But that's just in some sectors we may need to think about that. But in general, as I mentioned today, I keep talking about ESG. This is a trend. I think oppositely, actually, for ESG is globalizing right now. I mean, everyone trying to merge into a synchronized idea. But due to the fact about the deglobalization is happening among the world, I would believe that diversification is still the main theme for the coming 2 years about the GBA. I mean, for the international investor, when they want to diversify, they also try to understand, hey, how they can diversify into like Chinese market. And on the other hand, actually for some Chinese investor, they would like to know how to diversify among, as Bob and Stephen mentioned, about how to diversify their risk, how they diversify how is their system, and also about the investment side, they may also talk about how to diversify in terms of active and passive. Is that only about because recently due to the European thing. And actually we saw lots of fund flow diversify into another region. Not many people talk about because of the European concern, lots of money flow back into US, but not only about US benefit on it. Actually, we saw that Australia market, actually they're opening to internationalize in the last 2 years in a very quick pace. Actually, for example, like the ETF listed amounts has been catching up very fast as Hong Kong. So this is one of the way I would say that in the coming 2 years, people should know about how to diversify, not only about equity bond, but maybe alternatives as well, commodities as well. And also about the ESG is something you must understand.
Perfect. Thank you very much. And Stephen, do you have anything to add to this?
Hi. I think just adding on to that, I think what's happening right now because of the changing of the landscape. I mean, you could put it this way now, because how I see is because of the sanction, because of what the geopolitical issue, I think people have to diversify, or else they would just caught up in a situation that the stock down 10-15% in one day. That's what we've been through. I mean, so in the next short to medium term, I would say we'll probably see more investors looking into diversification. Okay, also looking into other because of the rate hike in US, instead of the chasing on the growth area, there will be more people looking at the more traditional value play with a decent dividend yield, that kind of putting some money into it rather than just a pure growth play. This is one area that I'll be seeing, that structural credit product that we see offering about decent amount of yield, 5 to 10%, that kind of fund structure. That's another area we're seeing people putting money in. And obviously a commodity play, no need to mention. I mean, also I think in terms of the hedge fund space, I think people are still looking at putting money in the slow return hedge fund, not the high flying hedge fund, providing sort of 6 to 10% return a year. That's the kind of client looking into putting some money into it. Yeah.
Perfect. I'd like to see and open the floor to see if any of the other panelists have some thoughts on the upcoming 2 to 3 years, or how the wealth management will be impacted. All right, so in that case, Mandy, I remember that you were talking a little bit about some of the challenges, as well as you identified some difficulties. I was wondering if you want to also pad up that and talk about what really requires further government's attention here in Hong Kong or in the Greater Bay Area, or some policy support that is required so that we can actually open this market up even further.
I think everything needs to be step by step to realize the interaction for the transmission of cross-border customer information. So, for example, at this moment, like a lot of channels, let's say for the mobile banking, SMS notification, or other service for only support for the domestic mobile phone. At the present, a lot of banks, they do not support to use Hong Kong or the Macau mobile phone can be received the SMS. For example, let's say if you open a bank account in China, you in and out for the money, so they need to send you the notification, or if you buy the stock, the equity, the fixed income, they are quite hard to deliver the message for the customer. So I think the SMS platform for the mobile company need to be for the break for the cross-border. And for the difficulty also is for the currency. So at maybe the coming 5 years, the Great Bay Area should be open can have issue the ID card for Hong Kong people or the Macau people can be more efficiency to be for one country two system to be like connect each other. Let's say for at this moment, we're talking about like the financial market, right? And we also talking about the education financing and for the tourism finance scenario, for the retirement like scenario. So for example, if Hong Kong people or the Macau people, they want to take pace for their retirement plan at the China pace for the lower living standard, for the more better like environment, but their like healthcare for their like bank opening or the financial management, their investment management is quite hard for the local people to be cross-border. I think for the regulator and the government should be consider about like how to break the Chinese wall between two different like people can be solving the problem of eating, living, traveling, and plus for the shopping, entertainment. So the Chinese ID card issue to Hong Kong people and Macau people can be more efficiency, can solve every problem. Let's say hotel, airline, and for the like hospital, healthcare, and investment, all problems will be solved. Yeah.
Thank you very much, Mandy. So now we're going to open up the floor for some questions. Anyone in the audience would be interested in asking our panelists some questions, feel free to put it in the Q&A box, as well as to raise your hand. We do have some coming through. Is there any upcoming ESG trend to watch for in 2022? Perhaps Alan, maybe you would like to take this question? Sorry, Andy. There was a question that goes, is there any upcoming ESG trend? Sorry.
Okay, no worries, no worries.
Yes, upcoming to watch for in 2022.
Okay, well, for the ESG trend, I think there's one of them, there's a mega trend is about the carbon credit. Carbon credit is there's like European carbon credit, US, but for the US actually it's not about the country standard, it's only about the state standard. So which means I just want to point out is that this is something is still quite new about the in the market, but for the carbon credit is something is quite important for the reality. I mean, for the real world to transit to the coming industrialization when they try to achieve the carbon neutral world. That's why carbon credit is something for them to like buy the credit so that they can meanwhile they can still continue with their activity and then they transit their industry to be less carbon output. This is how the system working, and that's why, as you can think about it, actually the supply is getting limited because most of the government they won't expand their allowance for the carbon credit. However, for the most of the industries actually they are quite new about to achieve to the carbon neutral world, so they need time. So meanwhile they need to buy more and more carbon credit. So just a simple economic like demand and supply curve. So you could see that actually in the mega trend the demand should be getting more and more push up the price for the carbon credit. This is something I think is we should look about it. And about if we divide the ESG into certain subsectors, I would say that environmental is important, like the solar, because if as many people talk about the European issue right now, they need to have the repower EU. Actually, they need to have more and more renewable solutions in a very short term, among a year. So this is something they need to think about. So maybe solar is for short term, they will think about, and for a longer term, maybe nuclear will push out again. So we can think about this. But for the S and G, that's was something I want to mention. Actually, remember ESG is not only about green. So I mean, not only about solar or renewables. Actually, ESG is a whole society and how the company can contribute to the society. So what we believe is when those companies, you can try to look for some companies which they're willing to contribute to the society and then they have good governance. Usually their quality about their company scoring should be quite high. I mean, relatively high. So maybe their downside protection is better. And maybe this is some ways what we are thinking about. And maybe this is also the trend for the ESG in 2022.
Thank you very much, Andy. So we do have another question, and one of our audiences are asking, any thoughts on crypto and digital assets opportunity, especially when it comes to the GBA? I wonder if any of our panelists would be interested in answering this particular question. In fact, do any of our panelists touch upon digital assets at all? Stephen, do you deal with any of the digital assets at the moment? Are you doing portfolio diversification for your clients?
Yes, just happened a few days ago actually. Somebody come and pitch with a digital asset fund, which we're still looking at it. I think with the as you know there's more and more. I mean, you've seen the more and more people are now more familiar with the digital asset, and more is getting used in the metaverse phase. I think in the near future, people will be more and more putting their more asset into this space. So I think will be more common in the next 2 to 3 years. I think at this stage we're still in the infant stage. We're looking at it, but we're not going to be putting a lot of the weighting into this asset class. But hopefully, as the governance on this is getting more and more sophisticated and then more mature, then we'll put more weighting in this. But at this stage, we're still looking at it, but we'll be very cautious in putting a lot of weighting and money into this asset class.
Perfect. Thank you so much, Stephen. So we do have a very interesting question. Now, this is open to all panelists again. Apparently, during a recent webinar, a CUHK sociology professor, Sarah Tong, explained that Hong Kong has over 1 million residents living under the poverty line. These people, according to Professor Zhang, are susceptible to political extremism. Okay, so we're not going to touch too much on the politics side, but how to convince, especially these people who are not necessarily interested in stock markets or a little bit skeptic towards the GBA integration, why they should benefit from the increased financial integration in the GBA. I'm not sure whether or not Andy might be in. I think maybe from a global diversification prospect, especially for people who are not necessarily interested in stock markets and are more passive, perhaps there can be some answer here of why we should look into the China market.
Okay. Well, to be honest, like if we are not talking about the direct beneficiary or the impact from the financial market, I would say that for the GBA, I mean, original concept is try to for example, one of the things is about try to diversify the housing market, the pressure about the housing market. This is one of the original idea. I mean, a few years before we talk about that, and because this is one of the way, because before, I mean, the Hong Kong property market actually increased. I mean, that the price was increasing so fast, and during that time, when the GBA announced, they try to average out the property price and try to slow down or cool down a bit about the housing pressure. I mean, the housing price pressure. This can be one of the benefits from the GBA system. This is what we may think about. But also, if we talk about not only about the direct impact from the financial market, we can think about the indirect market. in direct way is because what we wish, I mean, for the original idea is when the GBA can be an international Bay Area, just like what happened in New York, what happened in California, and also the Tokyo Bay. What they try to do is when this area is getting better and better, they try to like diversify or contribute the wealth to solve more and more problems. I mean, for the government to solve more problems. I believe this is one of the ways as well, but maybe due to the COVID situation or something about the transportation issue, this could be a bit, slow down than original idea. I mean, slower than the original idea. So we couldn't see how to benefit from the for example, like the housing market as well. Hopefully, this is some insights I could share with.
Thank you very much, Andy. I know this is an interesting question, and thank you to our audience for that. For very, very, very sharp question. So I think in view of timing, and I see that there are no further questions coming up, perhaps what we can do is we can wrap up today's panel. So once again, thank you for our esteemed speakers for today's panel. I hope you guys have found this useful, found some insights on investing opportunities within the GBA and also some of the challenges. And perhaps right now I can pass the mic back over to Fionn and also to Tim to just round this off. Thank you, everybody.
Great. Well, thank you, Caroline. You've been an absolutely superb chair this afternoon for a very substantial series of discussions. Firstly, Kelvin's excellent keynote address, and then a really insightful and in-depth discussion from our panelists. Huge amount of expertise around the virtual table here this afternoon. I think you've given us a good feel for the dynamic situation that is the financial sector in Hong Kong and the GBA at the moment. There's a lot going on, from the tech changes through the sort of regulatory challenges, the politics, the geopolitics. I guess that one of the key words perhaps is diversification that I keep hearing this afternoon. So I shall be going home and looking at my own very modest investment portfolio this evening to see if I can improve it in some way. But thank you so much for all of the insights this afternoon. It's really been a great event. I don't know, Fionn, if you want to add anything to those comments.
Right. Yeah, it was a very, very interesting session, and I actually learned a lot about GBA and different asset classes and strategies and combination between Hong Kong and Singapore, etc. And I'm sure our students learn a lot in this session as well. And and also I would like to express my thanks to Caroline and AQUMON to host this seminar. There's a lot of work for organization, and also to all those panelists again, Stephen, Mandy, Andy, and Bob, and yeah, a biggest thank to all of you. And just a little bit tiny notes to our students, and there's actually another session at 7 p.m. and so please dive into part 2 of the discussion tonight. Yeah, we'll see the students there later.
Perfect, thank you. I think if the panelists don't mind, perhaps we can all turn on our cameras and we'll do a lovely webinar shot for LinkedIn and whatnot. So Garbo, would you please help us take a photo, please?
Yeah, no worries. I'll take in 3. Smile for the camera, guys. 3, 2, 1. Okay.
Thank you very much. Thank you for our audiences for joining us today. And thank you once again, CUHK CSC, and also our lovely panelists for this wonderful session. Hope to catch you all soon.
Thank you.
Thank you.
Have a good one.
Thank you. Ciao.
Bye.
Bye-bye.
Bye-bye.